Welcome to Kitco News. I'm Niels Christensen, and welcome to our special coverage of Mines and Money's Online Connect Virtual Mining Conference. Joining us today is Chen Lin, president of Lin Asset Management. Chen, thank you very much for joining us today and talking with us.
Thank you, Neil. It's my pleasure.
Part of this virtual conference, you're part of a panel discussion looking at China's role in the gold market. And it couldn't come at a more opportune time. I would love to get your thoughts on Chinese companies aggressively buying gold companies. What do you think is the motivation behind this aggressive M&A activity?
Yes, there have been quite a few Chinese company buying gold company lately. One is Guyana Gold. There's multiple bid, and then finally look like Zijin going to get it at very high premium. If you look at the bottom a few months ago versus now, it's amazing. And then there's also buying in Australia company, another African project. So what I see is, there is a lot of money printing. There's all this money coming to companies' balance sheet. They have a lot of capital, so they're putting money to work. It's a very simple math. Okay, if you believe gold will be 1,700, well, I'm not talking about 1,900. I'm not talking about 2,000. If you believe gold is 1,700 next year, gold mining companies are very undervalued. There is tremendous cash flow coming into the gold mining company to their balance sheet. Because in general, going after went through the downturn, most gold mining companies are very mean, very lean. They are actually very effective. So they are accumulating a lot of money from this $1,700 gold. So and in the same time, we don't see too many bidding from the Western company. So Chinese company become the first mover. I believe this is the first wave. There will be a lot to come.
Some of the research that we've seen, actually, Chinese production, like their domestic production, is going down. Russia is looking to actually overtake China as the number one gold producer. You have Australia increasing production. Is this sort of international scope sort of part of that, in that China wants to replace ounces that they're losing domestically?
It's one possibility, and China definitely. If you look at the Chinese gold mining project, they are actually pretty low grade. Some actually have a very high environmental impact. From China perspective, there are more and more people, more and more environmentally conscious, right? So they don't want all these heap leach project, and potentially there was a dam broken by Zijin. I think last year there's a very bad publicity. So people worry about that. So that's partly attributed to the lower production of gold in China. So yes, they're looking elsewhere, anywhere they can make money. Oh, these are private companies, right? So even though they are supported by the government, but they're private companies looking for where the profit is. So those are low-hanging fruit, very good projects. So they took them.
So what does this mean for the mining industry? I mean, I guess you see that Chinese companies. Are you worried about bidding up projects? I mean, we've sort of seen M&A activity sort of be around that sort of fair value level. So now, if we have an active buyer coming in, do you think we're going to see sort of valuations pick up? And do we see something like what happened in 2011 when companies started overbidding for projects? I mean, now that we have we have active buyers in the marketplace, do valuations go higher?
Yeah, that's a very good question. Well, if you look at the fair value, it depends on gold price. Where your gold price assumption is. I think from investor point of view, I'm not very overly aggressive on gold price. But for those gold mining companies, their purpose was something more brighter future. If you assume even 1,900, 2,000 for the next few years, almost every project is trading at below NAV. Okay, so they would just come in and buy it. And if they believe gold price is going higher, they are buying. And they are building the company for the future, for the In terms of those Chinese company, you look at like Zijin. It's used to be a very small company, and then they expanded aggressively. They made quite a few project works, where other people couldn't in China. So they are building their empire. They see this is their opportunity, and maybe they can be the next Barrick or Newmont.
So let's switch gears now. Let's look at the broader market. I mean, obviously, M&A activity is picking up. What are your thoughts on the health of the market? Like we're coming off of the COVID-19 lockdowns. Do you see a healthy market in the mining sector?
Yes, actually, what I saw from my feedback from mining company, COVID though shut down a lot of mine. Actually, it's very positive for mining company, especially for the long run. Because after the COVID, company were looking for job, looking for revenue, right? The country, they are very sensitive to the job and revenue. Even, I give you an example. One of the company I have a pretty close contact, Oceana in New Zealand. They say even New Zealand government, so environmental sensitive the country, and then they lose all the revenue from tourism. They are looking to help mining company. It's very different. It's sharp contrast. That's just one example. There's so many. I think a lot of country will come back. Say mining is my core business. It will become an essential business. So actually, the COVID, though unfortunately it is, actually very positive for the mining company, especially gold mining company, because you got two-folded. One is gold price start going up. And second is country become very supportive of gold mining. Just look at the recently Kinross. Kinross last week reached a deal for their Tasman, right? Tasman, their largest project. They negotiated for 2 years. For 2 years, they couldn't reach a deal. After COVID, they got a deal. Just look at that. So this Kinross is one of the top 5 gold mining company in the world. So and then in Africa, one of the African projects. So that's just one example. I see more and more of this coming, and so it's we could come into a golden age for gold mining.
What sector do you like? Like, how would you build your portfolio? Do you, is it a mix? Seniors, mid tiers, explorers? Do you like explorers? What are you looking at right now?
I think it depends on your objective, your time frame, and how much risk you can take. I have a portfolio with both senior and juniors, even juniors of junior, very early stage exploration company. So right now, the situation is in the gold mining, gold investment. There's very little money coming into the mutual fund, to the smart money, so-called smart money. Money goes to the ETF. They are just chasing the chart, or say they just look which chart is good looking, and then they buy it. So in turn, you just look at the largest gold mining company in the world. The valuation gap is huge. Yeah, we have a Newmont, Barrick, very highly, visible. Everybody buying. In turn, their valuation very high. If you just look down the top miners in the world, you look at the Kinross, we mentioned Goldfield, that's both I own. Their valuation is almost half of those top ones. You just go down a little bit, the valuation, you see a lot of value. And then you go down further, there's a lot of value, hidden jewel out there. It's a stock, so bottom line, the stock market, the stock pickers market, and if you know what you're doing, you find the valuation, you can be very successful.
What do you think is going to take? Really interesting insight into sort of the valuations, and I'm sort of wondering, what do you think it's going to take to get the generalist involved in this market? To sort of get the valuations back to sort of fair value. I think a lot of people have been saying that mining companies are so undervalued that they just, but they don't really know what's going to take to get generalists involved. What do you think? What's the spark that ignites this retail rush into gold miners?
Yeah, exactly as you mentioned. The valuation gap is quite wide, and then there will be a M&A, right? So for Newmont, they can basically buy other company at 50% premium. Still, it's undervalued versus their own asset. That's one possibility. There are also other smaller company. They may choose to merge together to become bigger. The bigger is better. Bigger is in the ETF more and more weight of more people buying. Why not? So there's a lot of smart people out there. They're thinking. I see. If gold just stay around 1700, I'm not looking for gold go to the moon. Just stay here. There will be a lot of MMA in the gold mining space, and it's a very exciting time in gold mining industry.
Chen, it's been a pleasure talking with you today. Thank you very much for sharing your insights with us.
Thank you, Neil. It's my pleasure.
Thank you very much for watching Kitco News. For all our coverage of Mines and Money, go to kitco.com. Stay safe, stay healthy.